We've all heard about extreme couponing, but what about extreme mortgaging? That's what one 31-year-old did by slashing his expenses, taking on multiple jobs to pay off his mortgage in just 3 years. CTV chief financial commentator Pattie Reid sat down with Sean Cooper, author of Burn Your Mortgage, The Simple, Powerful Path to Financial Freedom for Canadians. They looked at some of his secrets to his success.
Sean, you're a millennial, and sometimes millennials get a bad rap. Can I start by asking you, how old are you, and when did you pay off your mortgage?
Pattie, I'm currently 31 years old, and I paid off my mortgage when I was 30 years old.
All right, so that's a phenomenal thing to have happened. So let's get down to basics. How on earth did you ever pay off a mortgage?
Well, I did it in two ways, by increasing my income as well as cutting my expenses. So on the income side, I worked extra jobs. So basically I was earning side hustle, as they call it. So I was beyond my full-time job. I was also a personal finance writer, and I also was a landlord. I lived in the basement of my house and rented out the upstairs. Most people usually do the opposite thing. And also in terms of my food expenses and transportation, I cut those to a minimum. I was smart with my food spending, as well as I took transit and biked to work to cut back on transportation costs so I could put more money towards my mortgage.
Now, was this a goal? I mean, you bought your home and then you thought to yourself, okay, I am going to pay this off in record time.
Yes, I mean, the funny thing is I actually signed up for a 5-year fixed rate mortgage, but I ended up paying it off in a 30-year mortgage off in 3 years. So, I mean, it certainly wasn't the plan to pay it off that quickly, but once I kind of got going, it was kind of addicting to put that money against my mortgage and, you know, see how the balance would go down so quickly.
Now, you live in Toronto.
Yes.
And mortgages and housing prices are just so high for so many people. Did you have any fun at all? I mean, seriously, like if you're scrimping and saving every dime, unless you're making a phenomenal income, what kind of quality of life was that?
Well, I certainly had fun because, you know, being a slave to your mortgage is not a lot of fun, but I was smart with my spending. For example, I would still go to see movies, but I would do it on Tuesday when the price is lower. So I still got out to have fun, and, you know, maybe instead of going out every night like some of my friends, I would go out on a Friday and Saturday night. So I was just smart with my spending and made paying off my mortgage my top priority.
What was the biggest thing you felt you did right through this process?
Well, I would say my whole philosophy was short-term pain for long-term gain, because I knew I was going to only be working super hard for those 3 years until my mortgage was paid off. But then I ended up writing a book, so I was working even harder after that. But that was the original plan. Now,
you've paid off this home. Do you plan on stepping up into a bigger home now? Maybe another mortgage?
Exactly. So a mistake that I talk about in my book, a common mistake, is buying too much house. And a lot of people think, oh, I'll just spend an extra $50,000 on a house and the price will be slightly higher. But a bigger house also comes with, beyond higher mortgage payments, higher home insurance, property taxes, utilities, and if you have an extra bedroom, of course, you'll want to furnish it and you'll have to clean it as well. So it's not just a one-time expense, it's an ongoing expense. So, you know, buying too much house can make you house rich and cash poor, and you won't have money to go on vacation or have fun. So I'm sure your spouse might not be too happy with you. So.
And now, when you talk about how much you paid off in terms of the side jobs, can you give us an idea of how big that mortgage was?
Yes, my mortgage was $255,000, and I purchased my house in August 2012.
And so how much did you put down at the time?
I put down a sizable down payment of $170,000, but I had been saving for 2 years and actually graduated from university without any debt. So I had 3 jobs back then as well. So I was basically saving even back in the university days. That's how I was able to end up with such a sizable down payment.
Any way you look at it, Sean, you're pretty industrious. Do you think the average person out there has the drive to do what you have done? And do you think it's realistic to expect others to do the same?
No, I don't. And to be honest, if I tried to do the same thing in today's housing market, I probably couldn't. So my advice is, and I talk about it in my book, you know, I did it the hard way, but that doesn't mean that you can't find extra ways to save money in your daily life. It's basically looking at the big picture of your finances. So I went without a car, but if you're a family with children, that's probably not practical. But perhaps instead of having 2 cars, you can have 1. And, you know, instead of buying a brand new car, perhaps buy a 2 to 3 year old used car from a registered car dealer. So it's just kind of, you know, looking at ways to save money without necessarily hurting your lifestyle.
Did you make any mistakes along the way?
I mean, I guess I could have had a bit more fun. In retrospect, maybe I could have paid off my mortgage in 5 or 6 years, but I'm able to enjoy financial freedom now and, do whatever I like, travel. So, I just work hard for those 3 years. So I think it was definitely worth it in the end because now I don't have to worry about a mortgage for the rest of my life, let alone 30 years, which was the original length of time I had it for.
Okay, so then I have 2 questions for you. Are you saving for retirement?
Yes, the funny thing is the money that I was putting towards my mortgage, I'm actually taking that cash flow and I'm splitting it between my tax-free savings account and my RSP. So I'm putting, because I'm used to putting that money towards my mortgage. So, instead of, I guess, just having fun with all the money, I'm kind of in that super saver mentality and I'm putting that money towards that. So, step 1 of financial freedom is a paid off house, but you still have to have extra savings outside it because you can't really get that money out of your house unless you sell the house or take on more debt through a home equity line of credit, which I certainly don't want to do. So yes, I definitely need to build up my savings, and that's what I'm working on right now.
And my final question to you, have you moved out of the basement?
That's the most common question that I get, but no, I'm perfectly content in the basement. I mean, I'm just one person, and I was actually joking with my friend, it's too much space for me, so maybe I can rent out one of the extra rooms on Airbnb, but probably not going to be doing that. So.
Okay, thank you, my friend. What a money machine.